Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the upcoming earnings season and take a look at what happened in the last season at some popular stocks. We'll also give our view on where stocks might go now, focusing on the potential trading opportunities that the earnings season represents. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now let's talk about market opportunities. If you don't know what they are, allow me to explain. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. So here's an example of a recent market opportunity. You can see some fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. For example, the part on the EU and its disagreement with the Italian government over its budget, which has put pressure on the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the right-hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's had you decided to trade on this market opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further along. At these points you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, then you could potentially have a loss of this amount at the resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. So what's the earnings season and why is it important for traders and how can you trade it? Earnings seasons are months of the year when a majority of quarterly corporate earnings are released. Earnings seasons fall in January, April, July and October. For traders, this means that almost every large company on the market will report their results, and this can have a great effect on the prices of the stocks you trade with, providing a great trading opportunity. The two statistics that are usually considered most important are revenue and earnings per share, and investors will be hoping for a beat. That is, a statistic higher than expectations in both categories. If this happens, a boost in the stock price is more likely. But watch out for what investors call guidance. These are projections for the future. Most large companies hold press conferences after results are published, where the CEO talks about the future prospects of the company. A positive outlook tends to influence the company's stock price higher, and negative noises about the future will bring the price down. As an investor, you should also be keeping an eye on price targets, which will give valuations stating whether the current price of a stock is overvalued or undervalued before that company reports its earnings. You can, of course, request such information from your senior account manager. The big banks always kick off the earnings season, and this October the big guns begin to declare their earnings this week, with Citigroup, JP Morgan and Goldman Sachs leading the pack tomorrow, and with Bank of America and Netflix reporting on Wednesday. But many giant companies, including Apple, Alphabet, that's Google, and Facebook, are expected to report their results at the end of October, and the earnings season will go on until mid to late November, with cannabis stocks usually reporting quite late in the season. So what results do we have so far? Until now, only smaller companies have reported, but the big banks will give us clues on how well the season will go for other companies. Of the few S&P companies that have reported results so far, 19 of 21 companies have reported above expectations earning results, while 11 reported above expectations revenue. In the event that this trend will continue, companies will be hoping for a boost to their share prices from this season. This is only a small sample though, so this statistic will change and we will know a lot more by the end of this week. But we can talk about what happened last quarter and what analysts are expecting this season. So, second quarterly results from the S&P 500, that is the USA 500 index, showed that earnings remained around the 5-year average, with 75 or 76% beating EPS estimates and 58% beating revenue estimates. It was a good earnings season, but couldn't match the 4 previous seasons' excellent results. However, investors' expectations were lower, so the results generally continued to boost the USA 500 to a record high on July 26th, until trade war tensions flared up later and pushed share prices down. But let's take a look at some of the most popular stocks and how they performed last quarter. Apple and Tesla, and see the reaction of their stock prices. Both stocks have experienced volatility, although Apple has performed far better in recent months. For years, Tesla has been a firm favourite for traders, but since the end of last year until June this year, the stock has been in a downtrend, with poor results announced for the first quarter. When second quarter earnings were announced on July 24th, showing that revenue was $6.3 billion, slightly worse than expected, and reporting a loss of $2.31 per share, investors were not happy with the results, and the stock fell by 3% by the end of the next trading day. As you can see on the chart, poor results were expected. And if you include the previous day's losses, Tesla was actually down by 13.91%. As I will explain in a moment, it's also important to remember that Tesla released its results in an unfortunate moment, since the US-China trade war was hotting up. Tesla, by the way, is due to declare its results on October the 23rd. Apple reported its results on July the 30th. The popular company posted revenue of $53.8 billion, an increase of 1% year on year. Earnings were $2.18 billion, down by 7% for the same period last year, but still above expectations. In aftermarket trading, Apple's price went up, but when the regular market opened the next day, Apple traded 1.24% lower, and Apple crashed by 9.25% by the following Tuesday. Despite the good headline figures and positive future outlook announced by the company, the performance of key iPhone revenue was worse than expected, falling by 12% from the same quarter the previous year. Apple's stock price was also ruined by a rise in trade war tensions, as on August the 1st, President Trump announced that the US would impose a further 10% tariff on $300 billion worth of Chinese goods, sending stocks spiraling lower. Apple suffered more than most over fears that Apple and its products could be targeted by China. Since then, as you can see from the chart, Apple is currently in an uptrend and trading close to an all-time high. Apple declares its earnings on October the 30th. So, what to expect this quarter? Well, as I already mentioned, we are not expecting outstanding earnings seasons of previous quarters. For this earnings season, we again have a number of companies warning that their numbers may be lower. This management of expectations is probably a good thing, since lower expectations in advance of results makes investors welcome any surprise better than expected, and can push stock prices higher. For S&P companies, the average estimated earnings decline is minus 0.7%. When talking sectors, the utilities and healthcare sectors are expected to report the highest earnings growth, while energy and IT sectors are expected to report the biggest decline. So what impact can be expected upon stocks? This obviously depends on results, but the three main factors to look at are earnings per share, revenue, and forward guidance. But in some cases, traders look for other numbers. Tesla is a special case. Although orders are a closely watched figure, the company historically has a problem with delivering their product on time. Until recently, Tesla has had a bad year, with the stock sinking some 26%, but since the end of July, its price has been trading in a range, and for now, it seems to be free of the downtrend seen in the first half of this year. It's another question whether Elon Musk's company can grow again, as far as prices are concerned. But, just as last season halted its decline, it's not impossible that good results this time may push the stock higher, although a lot will depend on the trade war. Apple has found itself consolidating this year. As with many other companies, its fiscal 2019 hasn't been looking good compared to the double-digit revenue and earnings per share growth it delivered in fiscal 2018. But optimism over new iPhone orders, which has seen analysts upgrade stock prices, give reasons for optimism. Apple services have become increasingly important to its business. The services segment is now the tech giant's second largest business, and its revenue is growing rapidly. This is the segment that Apple wants investors to focus on rather than its declining overall iPhone sales. So any sign beyond expectation services growth might mean Apple will continue climbing and potentially hit a new record high. Other factors on stock prices to be looked at or considered are interest rates. Investors are hoping to see 3 rate cuts by the Fed this year, with one cut predicted by analysts at the end of this month. But anything less than this will disappoint investors who are afraid of signs of a slowing US economy. This is why the trade war has taken on even more significance than before, impacting stock prices and crude oil in particular. Any full trade deal between the US and China has the potential to boost stocks above its all-time high. Of course, we at 4Trade will be following the earnings season and its impact upon stocks, crude oil and other instruments very closely. So please do get in touch with the Senior Account Manager if you have any questions or want to take advantage of the trading opportunities that this earnings season will present. Until next time, goodbye and please join us again at 4Trade soon.